All right, welcome back to Politics and Profits, the show where we cover money, current events, and politics. Well, the stock market is at or near record levels on all the averages. What is next for the major indexes? And join me this time from Seattle is partner and wealth manager of Hightower Advisors. Let me welcome Randy Williams-Gurian. Randy, welcome to the show.
Thank you.
What's next, Randy? I'm going to ask you to pull out your crystal ball.
Yeah, it's a big question, Rick. I think the NASDAQ has had such a big run, and a lot of the technology stocks are really stretched here. I think that the market is always looking 6 to 9 months out, and it's telling us that we're going to have some kind of a solution to the virus, and the economy is going to get started again.
That's important news. As you say, the market does look 6 to 9 months out, and the market's telling us now that we see a solution to the virus, some positive news of the virus. I want to underscore that. That's important. That's what the market's telling us right now.
Yeah, I think so. And there's a lot of vaccine candidates, and some really good therapeutics that are in late stages. So I think the market is telling us that we're going to get the economy restarted. We don't see it yet in the money center banks and the travel related names, but they moved up today quite a bit. And there's a new 15-minute saliva test that came out just yesterday for $5 from, I think it's AstraZeneca or Abbott, and it was the market's looking forward.
Any particular segments of the market that look more favorable to you at this point?
Boy, that's a tough question. We've had such a good run in just a small group of large cap tech stocks. I've always been my career has been focused on technology stocks, and so I'm a little partial to those. But they've had such a big run. I think it's always good to take a long-term view of this and to dollar cost average into the market and not try and time the market. So. Sector-wise, I still don't like, some of the COVID-related names. I think it's going to take a long time, for example, for the airlines to come back. I think it's going to take, a long time because of that for Boeing to come back. That's a Seattle company here in the Northwest, and, they've really had a hard time. So I think there are sectors you want to avoid in terms of the market today, but sectors I'd buy into at these levels, I'd be careful.
So even though the market's telling us it is forecasting a positive outlook on the coronavirus, on the virus, those stocks like airlines still concern you?
Yeah, because I think travel has changed forever. At least, I don't think the virus is just going to be cured and then everybody's going to get back on a plane.
Got it.
I think that's going to take some time to get used to. And I think it's, the airline stocks are so difficult because they have so much debt and their business models are predicated on having their planes full and running those planes basically 24/7. And if you don't have that, then the cost of their business model just eats them up.
That makes sense.
So we've got that going on right now. And I'm a little concerned about some of the airlines, and it's just a question of how comfortable and how quickly people get comfortable going back and traveling.
You explain that very well. Even though things may get better with the virus, doesn't mean it's back to normal. Things have changed. And the airlines will see that the effect of that. Again, I know I'm being repetitive here, but you bring up a great point. The market looks out 6 to 9 months. It's given us a good feel for what's happening with the virus. Can the market rally continue?
I think it can, Rick. Bull markets don't. If this is a new bull market, you can argue that was that a bear market, the shortest on record. But if this is a new bull market, we had a period where stocks had the biggest gain over 50 days in history just recently. And when you have those periods, if you go back historically, I think like 6 out of 6 times the market's up a year later. So yes, I think the market can grind higher. There's a ton of liquidity out there. We've got an election, but I think it'll get past the election too. So I really think the market is being driven by super low interest rates, a very expensive bond market, and just a lot of money chasing fewer and fewer stocks.
A lot of money.
Yes, I think stocks a year from now will be higher.
So you disagree with some of those pessimists in the media who say that this market is disconnected from the economy?
I guess I do disagree with that. I think it comes down to earnings. And my last point is just that I think what companies are doing and why the tech stocks are doing so well is that the overhead picture, everybody's working at home. So companies, I don't know if all those people are going to get their jobs back. And so what you're really looking at is earnings. And, with fewer people, companies make more money. When companies make more money, stocks go up because it's a good thing for the stock price because the company's making more money. It may not be as good for the economy and our
consumer
folks that don't have jobs. But I think we were overemployed at 3% unemployment. We may go back down from 10 or 12 to 10 to 8 to 6, and the market will really like that trend. And that's another reason why I think stocks are higher in a year.
Good point, Randy Williams-Gurian. All right, Randy, again, partner and wealth manager at Hightower Advisors. Your first appearance on the show. I want to let our viewers know that you'll be making several more as a financial contributor to Politics and Profits. Good stuff. We'll see how it plays out, and we thank you for joining us.
Thank you, Rick. Thank you for the opportunity.
Broadcasting from the Liberatory CPA Studios. Back with more after this.
Politics and Profits with Rick Amato is brought to you by Liberatory Accounting, the IRS problem solvers. To find out how Liberatory Accounting can help you, call 877-6-SOLVER. That's 877-6-SOLVER.